Hi, everyone. Welcome to Analyze Your Trade, episode number 18 for January 9th, 2018. Tonight, we will be discussing your trade ideas, and over the last few days, over 60 people have submitted up to 5 symbols for this week, and I've put together a list of some of the most frequently requested symbols, and we are going to get through as many as we can tonight. My name is David Kosmeter. I'm the creator of TimingResearch.com. And I developed this show with Dean Jenkins of Follow Me Trades. And he is here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right. Thanks, David. Hey, it's good to be here. It's good to be back with AJ, who I've been on with before, and to meet Stephen. I don't think we've done a show together, so I'm looking forward to hearing what you got to say, Stephen. I'll bet you got some good comments here, and when we get to the point where we look at your favorite trade, I'll be taking notes for sure. We got a good list of stocks here. We're gonna get through as many as possible. And on the YouTube thing, for the people watching, be sure and type in comments as we go, questions, and David will be watching for that. And he'll let us know. We'll try to field those on the fly to make this as good as possible. Because hey, this thing's all about you. We're here analyzing the stocks that the most people are interested in. We're going to offer our opinion on them, whether it's thumbs up, thumbs down, or kind of thumbs to the side. But we'll do our best and give our opinions on those, and then we'll see how it goes. And about the middle of the show, we'll all offer what our favorite trades are. But let's start off by introducing ourselves, and we're going to start with the new guy, Stephen. If you take a minute or two, just to introduce yourself. You know, just kind of what's your specialty? What kind of analysis do you look for? What's your thing, man?
Sure. Hi, everyone. My name is Stephen Place. I'm the founder and head trader at Investing with Options, where we teach people just like you how to become great option traders. My edge is in understanding option structure, the best way to structure risk in an individual trade, and technical analysis and quantitative analysis. So that's the main pursuits I use in financial speculation.
All right. I like those terms, edge and risk. We need an edge, and we got to control risk, man. Absolute keys. Awesome. Look forward to hearing what you got to offer here tonight. And AJ, I know you, but not everybody does. So what you got going on, man?
Hey there. I'm AJ Brown, and I'm from Trading Trainer. We've been educating folks on option trading since 2003. And yeah, we do the same thing. Very similar. We've been focusing heavily on our new program, which is called the 6% protocol, which is kind of a focus on using the income component of options, the theta decay component of options, and really focusing on architecting trades, again, managing our risk, and going for the marathon versus the sprint with the options.
I like that. The marathon, right? It's all about what the system produces, not what one individual trade produces, right?
Correct.
Because unfortunately, what I've learned is any trade can fail.
That's correct.
Yeah, all right. And so, but if we have an edge, as Stephen pointed out, right, over the long haul, over many, many trades, if we do have a sustainable edge, and if we have risk control, we might just make a little money. I'm Dean Jenkins, founder of FollowMeTrades.com, and hey, I'm a trader, and I like trading stocks and options. You know, I'm a technical analyst, used to be a fundamental analyst, and then I saw the light. And so now I analyze stock charts, and then I prefer to trade when I find a great setup, high probability of something going up, and I'm going to trade that with options. And if I've got a high probability of something go down, I prefer to trade that with options as well. It's all about the edge. So looking forward to scanning through the list of stocks that made it to the top of the viewers tonight, and we'll all offer our opinions on those. I think I know every single stock on this list, except one. There's one new one, HDSN, so I hope we make it that far. This is kind of like speed dating. We're gonna go through this list really fast. We're gonna bring up the symbol. Each of us will offer our opinion, share a chart or whatever method we're using to perform our analysis. And really, we're just going to say, yeah, I like the trade, here's why, or I don't, or I'm kind of lukewarm on it, right? And then about halfway through, 4 or 5 picks in, we'll all offer what our current favorite trade is. We've got that coming up. And again, be sure to ask questions, make comments, even throw in a few new symbols on the fly as we get going here. And David will let the folks here on the panel know. We'll try to field your questions as we go. So first up, number one is NVIDIA. And so we're just going to start this off. And Stephen, if you would be so kind, lead us off, man. What do you think about NVIDIA?
All right, so let me just take a step back and clarify my thoughts here. A lot of these stocks, especially in the semiconductor space, are kind of all trading on the same conveyor belt. They're all trading off of that same kind of theme. One thing that we can look at is correlation between, let's just say, NVIDIA and SMH, which is the semiconductor ETF. And you'll see that it's a very, very high correlation. This is a 2-year chart. Back at the beginning of 2016, NVIDIA was a $25 stock. It's now a $220 stock. Just an extraordinary, extraordinary run. This is one of those where if we were to see actual distribution in the market, yes, I'd be looking for some kind of a top or some kind of evidence for that, but we just don't see it right now. As it stands, we had a flush. We had that big correction from 220 all the way down to 180 at the beginning of December, and we basically made a round trip. The ideal scenario here from a technical analysis standpoint would be some kind of a cup and handle pattern because it has seen a very strong run over the past 6 trading days. It'd be really nice if we saw some kind of a pull, and with basically every single one of these stocks we're going to be talking about, it's like, okay, when's the earnings date? When's the earnings date? When's the earnings date? Because how you structure your risk in the options market is going to be a function of where the earnings lie. For this particular trade, I think you can actually get away with selling some put spreads into some kind of a pullback using the risk point from that breakout gap. And that was from the beginning of the year. The open is 204.10. That's the level. If we lose that level, then any kind of a breakout, in my opinion, is going to have failed. So you can look at something, off the top of my head, something like a March 185, 180 bull put spread with, running a stop right around that 204 point. Earnings is coming up. Obviously, it's always going to be a risk. It's not for a while, though. So, if you get a nice little pop, then you can take those put spreads off for profits.
All right. Put spreads is how you would trade that one. And it sounds like you're okay on that trade, right?
Yeah.
Okay. AJ.
So I like this trade as well. It is a cup and handle thing without the handle so far. It's also what I call a trend continuation. I saw it go extremely oversold, and now it's corrected back up. I like to, when I see a leading indicator pop in one direction or the other, I like to wait until the lagging indicator confirms it. I don't like to ever trade on leading indicators. With that said, I like this trade. I liked it a couple days ago more. And I could see either trading the stock itself, or I could see even doing some sort of stock replacement strategy on this. Again, earnings date, I'd want to get out of there before the earnings date comes in here. But I actually see trading this somewhat directionally. I have a higher confidence in this one versus wanting to trade it with a spread. I'd trade it more with the stock replacement strategy or with the stock itself. So yeah, I'm okay with this one.
All right. So I like Stephen's comment that it was a $25 stock, and now it's almost a 10x, a 10 bagger from really not that long, right? From 16. I'm a swing trader, and this is a trend trade. So I don't trade mature trends. So I don't like it. I love the trend, I would have liked to got the breakout back in mid 16. Who wouldn't, right? But in terms of a mature trend, I think basically the bear put spread or the bull put spread, I think is what you guys are talking about as a spread, right? That's probably a good play. It's not my thing. I'm trying to catch, the breakout into the next impulsive move or the breakout into the correction. And I think we're in a mature trend, and it's, putting in new highs, but losing momentum. So it's not my thing. No apologies for that. But I get what you guys are saying. It's a trend trader's dream, right?
Mm-hmm.
Not unfortunate, but I'm not a trend trader. That's cool. Next up, Home Depot. Let's take a look at that. I'm going to get this chart fired up, and we'll just keep rolling back around there. So, Stephen, what do you think about Bob the Builder's company?
Sure. So Home Depot is one of those large cap stocks that just did incredibly well last year. Home Depot and Boeing certainly comes to mind. It's parabolic right now. What I really like in terms of a trade setup right now is to expect and anticipate reversion, expect and anticipate, not a price-based correction, because this is an incredibly strong market. Markets can correct three ways: price, time, or momentum. And I'm expecting, we've already seen a momentum-based correction. I'm expecting a time-based correction. I want to see sideways action. I keep looking at the earnings date. Earnings date here is going to be Feb 20. So what you can look at, and this is a little bit of an advanced trade. There's some other things that come into play, like term structure and things along those lines. But something like a Feb-March 190 put calendar. It's a slightly bearish trade. It is a bullish volatility trade on March. What's good about this is the implied volatility in the option premium in March will stay elevated as we head into earnings. And since February options expire before earnings, the net premium goes away. So it's a pretty cute trade. It's a scaling kind of trade. What I'd look to do is go in half here. If we start to rally, then you have the 195 put calendar. And then you just go from there. Expected kind of return on risk here is about 10 to 15%. February is not that far away, so you're looking to hold this for about 2 to 3 weeks. But the whole idea here, we've already seen a momentum divergence. You can actually see that if you look at an RSI, or if you want to look at a MACD, if that's your flavor. But the rate of change that we've experienced on the past 3 impulses continues to wane. So it's reasonable to expect maybe a bit of a pullback and then some reversion, some sideways action. Very trendy stock. I'm looking for the trendiness to start to fade.
All right. I like that, the trendiness. It's a good technical term.
Yeah.
All right, AJ, where you at, man?
I'm almost on the same page as Steve, although I'm not looking at a Feb-March. I'm looking at a Feb-June horizontal or calendar spread, and it's a little bit more of a long-term because that back month, June, probably at the 185 strike. So I'm looking for, based on kind of the pullbacks that I've seen in the past, a move back past 190 all the way to 185. And then around Feb, I'd probably construct this with puts. And so I would then decide what to do with the back month at that point. If I wanted to, I could liquidate it at that time. I liquidate it when it gets close to 185 or when the Feb comes to close to expiration. And then wouldn't be surprised if we don't change gears and look for something. But I definitely would go with the calendar spread as well. Just maybe a little different structure.
Well, this is almost the same comment for me. It's what a beautiful trend, right? Meteoric move up, but it's mature. Although the market is looking for a big move, the implied volatility on this, if you just look out at March at the money, calls and puts both. They're looking for a big move, right? So we'll see how that plays out through earnings. It doesn't meet my criteria for a trade. For me, it's way too late to go long, way too early to go short. So I just don't have a setup here for a swing trade. That's all right.
Mm-hmm.
There's thousands of stocks out there, but it is an impressive, really, really strong uptrend. And a great company, really well managed company. Nothing, no knocks against them. It's just too mature a trend for me to participate in. Next up, BDX, and we will just keep rolling there, Stephen. think you're muted, man.
You're not, yeah. But you seemed passionate.
Yeah, it looked like you got something to say, but I think you're on mute, Stephen. We'll go to you, AJ, while he gets it figured out.
Yeah, this is one of the ones that I'm not a fan of. I wouldn't even be a fan of legging into a premium trade on this just because it hasn't been horizontally channeling enough. This is one I would probably want to pass on. I don't see that it's one that I'd want to catch for a break. It's not. This is too ambiguous. There's too many fish in the sea. I wouldn't spend my time with Becton Dixon.
Yeah, that's all right. Right? We don't have to like every chart. Right? I think that's a key thing that I certainly teach in my training with folks, my courses is, the question on any given chart is not how should I trade this. First big question is should I?
Should I or shouldn't I?
Yeah. And if there's not a clear setup that meets whatever parameters you're using, click off, man. Go find one that does.
Definitely, in my opinion, it helps if you're in some sort of like twosome, threesome, or foursome, where after you've kind of looked at these patterns and come to your conclusion, without telling them what your conclusion is, run it past your peers and let them run their ideas past you, and see if you might be out to lunch. Because if your three peers say one thing and you were thinking another thing, well then that it's just a good check.
I agree with that. Totally agree with that. I don't know, Stephen, we got audio on you yet?
Testing 1, 2, 3.
Yep.
Good.
All right. Yeah, BDX. I said hard pass. Hopefully you heard that. Simply because I've never traded it before. I don't think I have an edge in it. Never heard of the company before, and it's one of those where I'm an options trader. I always look for options liquidity first. Odds are this probably doesn't have a whole lot in it. So that's why I would also be like, all right, I'm going to move on to something else that I know is going to work out for me.
Yeah, fair enough. I actually love finding a new chart that I haven't heard of, or it's not a marquee name. I'm going to do a little diligence to make sure it's tradable and there's good liquidity and a good market and all that stuff. But when I see a symbol I've never heard of, I get kind of excited because I like to uncover the next breakout, the next big swing. But I don't think it's here on this one. My analysis on BDX is a great trend. Looks pretty similar to the other ones, with the exception of this big pullback. I got the Ichimoku cloud. I use that as a key indicator, and it's way above the 200 moving average. It's pulled back into the cloud. It found some support. It reversed strongly, and now it's you want to watch this previous high up here. Right around 229.65 ish. Right, that could be a significant overhead resistance. But if it breaks through it, then there may be some bigger moves coming. But I'm not trading it. Right, I don't have money in BDX. I'm not going to put any on it. Next up, this one is a marquee name. Everybody's heard of Micron. And let's go ahead and take a look at this. And, I think Stephen made the comment about semis, right? So many of them have very much the same chart, and, they kind of match. You could overlay them with the ETF with the semis. But Micron's a little different than NVIDIA because it's not making new highs right now. What do you think, Stephen?
We've got two levels to key off of this, and I think there's actually a really cute kind of setup that would work really well if it did come through. So there was that high volume selling that occurred at the beginning of November, beginning of December, and the stock, the trend has certainly weakened. Broke underneath that 50-day moving average, and it just hasn't gotten that second push higher. Now this sucker's an institutional darling. It's every single day that the CNBC guys and a lot of other people are always talking about those big call buys in Micron, and I think it's Tepper that's always involved in it. But it just hasn't. It's not the it's not that momentum darling right now. It's seen periods of sideways action before. Go look at how it traded in May and June. We've got key key resistance up at 47. The trade that I would definitely watch is there's a support area right around 39, and I would look for a failed breakdown underneath that level. If it breaks down and just falls out of bed, that's fine. But look for the push sub 40, okay, sub 39. And if those buyers come in and sweep, and you'll normally see a hammer candlestick, what I know as a 2B reversal setup, then that's going to give you a low risk entry point to at least play the stock to the other end of the range. Right now, if it hits the other end of the range, makes a higher low and breaks out, then you've got a really nice basis to work with. So it's a no play right now. I'd be interested to see how it trades at 47. I'd be interested to see how it trades at 40. Otherwise, odds are sideways.
Very good. Sideways. And I see it too. Kind of a channel that we're in between those levels you identified. I totally agree. Mr. AJ.
You know what? I think Stephen and I are from the same fabric. The scoop is I would do the same thing. I'm not going to trade it right now, but I'm going to watch it carefully. I'm going to watch to see if it bottoms out around $39, $40. And I would be actually legging into a diagonal here. So I would want to buy a deep in the money, far out in time, maybe even the January 2019 leap, something deep in the money. And then as it moves up and as it gets closer to, say, for instance, the maybe 2 or 3 weeks out from the February expiration, I would want to sell some premium against that back month and go with that and work with that and let that trade just live and hopefully create some income over the next couple of months.
There you go. It's a strategy. So my take, I see the same exact channel. I'm drawing horizontal lines here at the upper boundary at about 47, and at the lower boundary, lower current boundary here. There's trading strategies that can make money in a channel, right? I think there's more money to be made in breakouts and swings, and that's where I'm focused. But if it comes down to this bottom and reverses, it's probably going to stay in that channel, right? Mm-hmm. For a month or something, who knows? And there could be any number of strategies to make money inside that narrow range there. But I'm not really interested. If it were to go below this 40, call it,
be excited.
Below this 40 level, I'd be pretty excited because we're probably going to see a correction and down with a midpoint. Here's the Fibonacci retracement zone, these blue lines. Midpoint's about 30. It breaks this previous low here and it's down below the Ichimoku cloud. It could free fall down into that, mid 30s to 30 range, and that could be an exciting trade for me. That's the thing I'm looking for, is that kind of swing. And that
when you see when you do your swing trading, what kind of, you said you would leverage an option, or would you try to trade the stock?
Oh, I'd just go deep in the money, about a 90-day out put.
Perfect.
Deep in the money, long put. Right. For me, that's the most profitable loan. Right. If you think you got an edge on a direction, go long the calls, go long the puts. Right.
I love it.
That's my take on it. Right. I'm getting a thumbs up from AJ, so I feel good.
For what it's worth.
Yeah. No, I think you know what you're doing, man. Let's move on to Costco. Funny, this symbol should come up. My wife's over there adding to their balance sheet right now. Yeah, I got to get my previous. I haven't looked at this one in a while. But I'm probably 40, 50 miles from Costco Ground Zero. I live just south of Seattle, and Costco is headquartered in Kirkland, just a suburb of Seattle. Pretty interesting.
That's why it's called Kirkland's Signature. That makes sense now. Okay.
Although, yeah, all that Kirkland brand name, that's the city they're in, man.
Okay.
It's really, really creative,
Yeah,
right?
I learned. All right. Yeah.
Right. Which Kirkland means, General Mills or whoever sold a couple trainloads with Costco's brand printed on it.
Right.
So what do you think of the stock there, Stephen?
All right. So when I approach technical analysis, it's normally through some kind of a narrative framework, and that narrative is basically who's going to get screwed, all right, and what price levels will they get screwed at. Now, Costco's setting up with one of those Captain Obvious levels, right, where everyone and their mother is looking at that 1 month, 2 month, 3 month support right here. So we had that strong breakout on volume. It wasn't earnings. We saw hard fade after earnings, but 185.25 is where the support level is, and that is where a lot of pain will be had. Again, my thought is very similar to Micron, where we've got this obvious level, and if we break it, the bid will probably drop out. The institutions will be like, you know what, we're gonna lose the bid, and we're going to flush the stock, and then we're going to put our bid back in place and jam the stock higher. So I'm looking for a failed breakdown setup. If we get a 30-minute close underneath 185, use that bar's high as the trigger point. If we close again back above that trigger point, then you can look at a long position. Now, what your flavor is depending on what you want to trade. Something like the again, I got to ask myself, all right, when's earnings, right? March. I think you can pick up some, like the March 190 call. If you want to, stay on the short option side of things, something like the March 175, 170 put spread would be a reasonable place. Now, with that 30-minute trade, you just use the distance between your trigger and the initial low and double that, and that's going to be your stop. So that's a little bit specific. I know we're not actually looking at planning out those price levels, but I would be, and I'm going to, plan for a failed breakdown in Costco. Everyone is going to be looking at 185. The institutions will pull the bid, wait for the flush, and then get back in the stock. That's what my expectation here is. That would screw over a lot of people, and that's what I want to play for.
So it's a bear trap, and if you go short, you're going to be chewing your leg off. That's what you're
I think that's possible given the way given how it traded at the end of November. Everyone's going to be looking at the gap fill, and you're going to get a lot of greedy shorts that are going to be way too early. And yeah, they're going to get trapped, and then it'll squeeze back up to 195 to test that earnings high.
All right. AJ, you going to fall into that bear trap? Or?
No, I mean, I definitely see the consolidation. I see the clear level of support, not as clear level of horizontal or even descending resistance, but still, I'm looking at it for the break. I do agree that it's going to break, and I would do maybe a handful of different strategies. My knee-jerk reaction is to go, and I haven't yet, but go visit the implied volatility charts and perhaps time into a straddle or strangle around this. That would then be automatically closed at some sort of profit stop. But the other thing I like to do, and that's just because I like some of the automated trading, is I would do the trade like you're talking about, trade something deep in the money intrinsic if the breakout was identified. And I'd probably use like a velocity indicator. So if I see price action over a short amount of time in either direction, I would capture it on a little bit of a faster trade. Now, I know a lot of people can't do that because they're not sitting in front of the charts all day or don't have an alert system to do that, but that's an option too, kind of a fun option, a quick, make a handful in a certain day on those moves. But I'm not really worried. I wouldn't. I'm not going to jump on the bandwagon of trying to trade the retracement.
Yeah, I'm with you on that. And I see the support level that you guys have both talked about. And even if it were to break that level, you know, look at the strength of the Ichimoku cloud. That's projecting pretty significant support. It may break down a little bit, but it's probably going to find support. And then you got the 200 sitting down here, right? So even if it pulls back a bit, I don't think there's much velocity in it. I'm not interested in trying to short this particular issue, and I'm not interested in going long either. It's not a great chart for me.
And you could. I agree with AJ. You could look at the straddle right now, given earnings are out in March, I think. So you go out and check out a March straddle, and the premiums will stay elevated as we head into that earnings event. So you don't have to worry as much about that time decay. And then, you know, if you got the capital, you can basically gamma scalp your way out of it. So yeah, that's another possibility too.
Yep.
Yeah, I'm past. I got no money in Costco. Don't like it.
Yeah, you do. If your wife's going there every day.
It was just today, just stocking up, right? Just stocking up. Yeah. I'm trying to make Starbucks rich too, but they're another local company. But it doesn't seem to be affecting their stock too much. All right, hey, we've gotten through 5 symbols pretty expeditiously. So let's pull back from the list for a minute. Let's go around and because I don't think I've heard a ringing endorsement from anybody on any of these symbols yet. I'm going in tomorrow at the open and bet the farm. I haven't heard that yet. You know, kind of some, yeah, you know, do this, do that, maybe do this, but no hair on fire action. So what do you like, man? What does have your hair on fire? What's your best favorite trade right now, Stephen?
All right, from an income side, here's the S&P, and you know, shorting the S&P is a widowmaker, right? It has been all year. Right? We have seen 4 days in a row where the S&P has been above its upper second standard deviation volume band. It has been 5 days in a row twice, I think, in the past 20 years. Okay, so we're just in terms of expected volatility, we are extending. That doesn't necessarily mean we're due for a large pullback or anything like that, but you can look at slightly bearishly weighted put calendars. So if you go out to the SPX, you look at something like the March-April 2730 put calendar. That, in my opinion, is going to get you a nice pop because you'll get time decay gains. If the market pulls in a little bit, you'll get some delta gains. And if implied volatility rises at all, which it will if we do see a bit of a pull, then you'll get some vega gains as well. For the degenerate gamblers out there, right? First Solar, another compression breakout looking kind of set up. This is one where, you know, we've seen First Solar stay in ranges longer than this. Look at how it traded back in August. It was in a range between 45 and 50 for nearly 3 months. So it can obviously be range bound for a little bit. I think options are fairly cheap. You know, options are cheap across the board. You know, you can, if you're bullish on a stock, you're generally better off just buying calls versus buying stock because the premiums are so stinking cheap right there. First Solar long looks really good, and one area that I'm definitely looking at to fade again is all those stupid blockchain names, right? Kodak, for example, Kodak, like the picture company that went bankrupt, they ran something. The stock doubled because they're doing an ICO. The stock more than doubled. It's ran from 3 to 680. I think it's up more in the aftermarket as well. The bid ask is at 920 right now. So that's the kind of froth we're dealing with. In terms of options, there's not many optionable stocks out there with this theme, but one would be Riot. If Riot saw some kind of a move back above 40, that would be worth a look to just go out and buy some puts. And then XNet is the other one that I'm watching right now. If, you know, it's probably going to clear. It's probably going to go parabolic. Into that parabolic move, just layering in some put buys on, you know, fading that parabolic spike is going to get you, in my opinion, some pretty good profits.
All right, handful of ideas there. Pretty interesting.
Yeah, sorry, I had a lot on my list.
No, it's cool, man. I love the passion for sure. All right, AJ, what's got your blood pumping?
Well, so I advertised myself early on as somebody who's all about the theta decay premium, but in the last week or so, we've been having a whole bunch of charts here, similar to the Home Depot one we saw earlier, but with a little bit more definition, a little bit more confidence. I'm looking at the Chicago Board of Options Exchange chart right here, and this is one of the ones that I entered in just yesterday, actually. And I am really a fan right now. So I love the strategy that you were talking about, which is let's go deep in the money with basically what I call a stock replacement. If you go deep enough in the money, the option is heavy on the intrinsic value or in the money side, and so it's going to move dollar for dollar with the underlying symbol. The more that you get the in the money component in there, or deep in the money. But the other cool thing is when you start playing with the horizontal spreads, where you actually cancel out the in the money value, and now you're dealing with the difference in the premium, which actually has a much higher exponential curve to it. And so when is that usable? It's usable when you can forecast over the next couple of days approximately where you're going to wind up. And so I like these patterns like CBOE. Another one that I entered in back on Thursday of last week was Occidental Petroleum, and another one was United Rentals. And I'm using calendar spreads. And so, for instance, on the CBOE chart, which I'm just really happy about, these are only 3, 4, 5, 6-day trades. But you know, I'm in CBOE with a 135 strike. The months I'm using, I like to use kind of farther out in time. So it's a January-June 135 call horizontal debit spread. And so any of these patterns that I call trend continuation, where we've had a nice long-term, long-term trend, a pullback, and then we have some sort of lagging indicator, whether it be a MACD crossing or maybe a close above a simple moving average or something like that, something that confirms that we're going back and matching up with the trend. With January being, the January expiration being, probably including the holiday next week, about 6 or 7 trading days away. If you can say, okay, am I going to be closer to 135 by that time, and feel very confident about that, like I do with CBOE, United Rentals, and Occidental Petroleum, these trades are just fantastic, and that's what I'm really excited about, is these type of trades right here.
Very cool. And I've got a trend trader buddy that I compare notes with, and CBOE was one of his favorites. And that same thing, the continuation. I like a little deeper retracement. I use Elliott Wave, and I look for a Fibonacci retracement level.
Absolutely.
And CBOE didn't quite hit it. Little shallow on the correction, the pullback before the continuation. Mm-hmm. But I like your comments on, I think we're similar on, when we got a directional trade, right? If you've got an edge, right, and a high confidence, high probability on a direction, right, and you're going deep in the money, high delta, right, theta and IV are really off the table. They don't matter.
That's
right?
correct.
Right, like
That's
you
correct.
said.
Yeah, the key is when you identify. Yep. When you identify a tradable pattern, don't just go forward with that, with whatever strategy you want to trade that pattern with. Make sure that you then ask yourself, how confident are you that that pattern's going to proliferate out where you believe it's going to go to? You have to ask yourself that question on a scale of, like I like to say, 0 to 10, AJ, how is this pattern going to play out? Are you that confident? Because that's going to help me with my option trading pick the right strategy, right? With option traders, we have 27 different ways or more, depending on how the mathematicians work it, to trade these things. And you want to basically pick the right strategy and populate it with the right options to really get the biggest bang, and also to manage the risk in each one of these patterns. So it's not just a question of the pattern you've identified, but how confident you are in that pattern. And that's just critical, and a lot of people miss that.
I totally agree. I use risk to reward calculations in my trading. Right?
Oh, always.
And I'm not a huge fan of a lot of spreads, because you have to really, really filter through to find good risk to reward, right? On spreads, right? So that's why I really like the directional plays. If you got an edge and a method for picking a direction, right, then there's an edge. And for risk, for me, the key thing is everything's based on the analysis of the underlying chart, the underlying price pattern, and identifying a price target and a stop level on the chart, right? It's like, if I have a thesis that I've formed on a chart that says I think there's a probability of a directional, this thing's going this direction. What is the price level that would disprove that thesis? And it's based on higher highs, higher lows in an uptrend, lower lows, lower highs in a downtrend. And if we take out one of those levels, right, the thesis has been disproven. And then the question is, level versus my target, how much would I lose versus how much would I win? And does this trade make sense? I said that really fast. I hope people can follow me.
And if it does make sense, then you can also ask yourself how much of your portfolio, what's your position sizing, and that'll help you manage your risk, right?
That's right. That's right. How much, I think that's before you even get excited about how much could I make, it's go, how much could I lose on this trade? And is that a pain-free level, right? And let's adjust the position size so that if I do lose, which could happen, right, it's pain-free. I can tolerate it. I can absorb it. It's not a setback. I'll move on, right? So I like, I'm showing TK. This is a oil shipping company. And what I love about this is the potential for a breakout. So you can see this thing fell out of the sky, over $50, trading down here at 10. And so I just want to show the big picture. Now if I drill in, pardon the pun on an energy related stock, right? We see it taking out a previous high, kind of breaking out of this fry pan bottom. It's up above the Ichimoku cloud. It's rising. We got rising momentum. It's way above the 200, putting in new highs. So for me, a trade like this, I want to put my stop, probably right above the cloud at this previous low right here, take an entry at current price. My price target's up here at 1564, which is, it's not a full retracement of that down move. I'm looking at, potentially stalling at a Fibonacci retracement into that previous gap down, right? But if we can get this thing at $10 and walk it up to a reasonably probable trade at 15, that's a really good trade, right? That's a 50% move. And even if it stalls at only, 13, 14, something like that, not too bad, right? It's got trades at nice volume. It's got a nice option market. This is the one where you can, again, go buy, 90 to 120 day out call option on this thing, deep in the money, high delta, and let it run. If you're right, you're going to make, it's going to be a 2 or 3 bagger. And if you're wrong, if it comes down here and hits the stop, you're going to lose a couple $100. That's not too bad.
I've got another one that it's kind of similar to that price pattern. I think it's in oil as well. And AMRS. It looks similar to that, how that kind of is setting up with the one you just showed.
The whole energy, particularly drilling, drilling and oil infrastructure, energy infrastructure, they all look about like this. And there's some excitement. The problem is picking the one you want. This is pretty much the same setup. That's an exciting deal. I like it. Okay, let's go back to the list because people wanted to see their stuff analyzed. So the next one up here is Pfizer, PFE. That's what we got going on Pfizer. Wow. Okay, I'll hold my comments. What are your comments, Stephen? What do you think?
For tech, in my opinion, and this is controversial, that the ability to read price charts and the efficacy of technical analysis is going to be a function of the stock and who's in the stock, the float of the stock, the market cap of the company. And Pfizer is just one of those that is more statistical noise than there is signal. There's a lot of reversion. There's a lot of intraday just high-frequency trading and price action that I just don't feel that there's any kind of edge for me in the intermediate term. So, it's a pass for me other than, if you back this sucker out to like a 5-year chart It's been range bound. It's been, if you don't account for dividends, it's a high dividend stock, right? It's been running between 28 and 36 for a couple years now. If it breaks above that, it'll probably run to 40. It's just, for me personally, I don't think it's one of those where I really don't think I have any kind of distinct edge. I don't have a good read on the stock short term.
All right, AJ.
So just in the last month of December and into January, I see the consolidating or converging pattern. Again, I haven't checked it out. I've just been looking at the price chart, but I would be watching the implied volatility picture. And if there's an opportunity, and we're a little bit low in the price, but if there's an opportunity for a straddle or strangle and a well-designed, architected trade where, you're going to catch it whether it goes up or down, I would do that.
Okay. Man, I am all on board with Steven. You used all the right adjectives for me, right? And one of the things I teach in my trading courses is I think you ought to be able to, within about 1 to 2 seconds, when you load a chart, a new symbol, you ought to be able to see if there's a tradable pattern, right? And is it a new trend breaking out? Is it a mature trend starting to correct? Or is it a continuation of a trend that corrected and is now going to continue, right? Those are the 3 patterns that I care about. And I think, a trained eye can spot them 1 to 2 seconds. And when I look at a chart like PFE, all the words that Steven used, right, it's a mess, right? In terms of a swing or a trend trade, it's a mess. It's a mess, right?
Hot garbage
interesting,
is a scientific term.
Yeah, and interesting you pointed out the dividend, right? Because the big dividend plays typically are not great swing trades, right? Because most of the people aren't really paying attention to price so much as they're just buy and hold and clip their coupons, right? So not tradable, not interested in it at all. That's my take, right? But people typed in the symbol, they're interested, but there's we don't know what people's trading objectives are. All we can bring is what our objectives are, our opinion on the stock. In my opinion is it's garbage. That's a good in terms of swing trading. I got a 4 to 6 week horizon that I'm trying to trade. I have no idea where this is going next. No edge. Not interested. Walmart. Walmart is like one of the better run companies in the world that I don't want to. I love their business model. I really don't want to go to their stores. But wow, what a powerhouse. What do you think, Steven?
So
my wife said she'd be totally interested in going to Walmart if they put in a viewing gallery with a bar.
No, that's what Whole Foods in Austin is for. That's where you go watch the fun people. So look, if you haven't tried Walmart, the online thing where you order all your stuff and then they just throw it in the trunk of your car, it's life changing. Instead of being in the store for an hour, you're just in the parking lot for 15 minutes. So yes, the stock, if you go like if saying the word turnaround story for Walmart sounds weird, but it really has been. If you go all the way back to like 2015 and 2016, the stock was dead money, right? Back in 2015, it traded from 90 all the way down to 57, which is a pretty big move for this stock, right? And while the entire market was rallying, it was dead money for a while. I think that they did make some turnaround changes. I think it's the fundamentals are being reflected in the price action. With that huge move on earnings, statistically significant move. When we see moves like that, we have something called post-earnings announcement drift. And that's what we're seeing right now. I got to check the earnings date. So it's Feb 20. So you could probably, if we didn't sell off like we did today, I'd say calendars to take advantage of that time decay into February options. But I would be looking for ways to generate income before the earnings event and then wait till after the earnings event to play it again.
All right. AJ, man, Walmart.
So I looked at the fundamentals picture on this, and it's also I'm on with Steven Strong. So I'm the strategy I would do is what you're talking about. I'd either buy the stock or I'd go deep in the money, and this would be more of a longer term play, and I'd be planning on either getting out if there's some sort of technical exit on the chart here, or again, I'd probably get out as we get closer to earnings so I don't get surprised in the wrong direction.
There you go. Yeah, I don't like it. It's, I feel like a broken record sometimes, but it's, nice run. Too late to go long, too early to go short for me, from a swing trading perspective. No, that's all right. ABX. Little raspberry from the crowd there?
Yeah, I don't like it.
Yeah.
But it's Steven's turn.
Yeah, I know. I'm always getting first dibs. Yeah, I haven't traded a gold miner stock in a long time. You can make the case for, like, if some of these miners completely fall out of bed again, you can probably get some decent put sales and generate income like that. It's just, it's not for me. It's kind of like Pfizer, where they're just running the liquidity is different and they're a little bit more efficient. So you're not going to get the price patterns you want. So I'm just, it's a pass.
All right. I actually, I'm not ready for it yet. I like the pattern, right? We look from, beginning to 16, that big run up from under $8 to over 22. That's an impulsive move. It corrected and now has meandered down in kind of a sloping channel. It looks like it might have found a bottom at 1328. It's got a nice high, little pullback, may find some support. I'm a buyer if it gets up above the Ichimoku cloud and above the 200 SMA. Then we've got a continuation happening, probably slowly, up to a target zone above $23. But it's not proven yet, right? Not proven yet at all. Again, I'm a buyer at about 1665, and we're at 14.5 now. So I got it on my watch list, and I'll come back and look at it then and see how the rest of the trade parameters look. I love the liquidity of it, the depth of the market, but worth watching, but it's not ready yet. I actually love having things like this on my watch list, waiting. I'll wait months, right, until it finally triggers. I mean, I'll throw out another one. I just can't help myself. AGG, the core bond fund. I've been watching this one and waiting for 2 months. And my go on this is 108.65 short. And finally, we're a few ticks away. So we'll see. But not yet. And I'm as patient as they come. And it may never trigger, and that's just fine too. But back to the list, HDSN. Oops, did I type it right? I did not. While I'm typing, Stephen, you can offer your thoughts.
All right. There's generally two kinds of reasons why you enter into a stock. You're either investing in the company with fundamental analysis, or you're buying the structure of the stock with technical analysis. I've never heard of this company, right? I had to go to FinViz, look it up. They are a refrigerant services company in the United States. Ask yourself, do you really think from a fundamental standpoint that you have an edge? Unless you've had 20 years in the refrigerant services industry, odds are you don't. So we got to look at the technicals, right? Now this sucker's been in a range. It broke down hard on October. It had a touch of resistance right above, 630. It had resistance again at 630, and then we had that nice breakout on volume, right? And then today, we basically closed underneath the low. Now that tells me the stock is trading like garbage. It is not if you see a hard reversal like that, that tells you that the trendiness of the stock is simply not there. Okay, there isn't an edge. Now, odds are what happened is that breakout got on a lot of people's watch lists and newsletters and all this other stuff, and then it showed up in our aggregate watch list today, right? But it's the train didn't even leave the station. It kind of went backwards and crashed into the station. So I don't think that there is, until you see a move back above 660, you know, there's not a decent opportunity to get long this stock.
Okay, you have an opinion. That's good. That's what you're here for.
Yeah.
All right. You have an opinion, AJ?
Yeah, I had never heard of this company either, so I had to do a little bit of research myself. And so, you know, there's this falling window, and Stephen already described how that resistance is playing out, and so I just mirror everything he said. I'd like to also test support at 550, and so I'm not so excited about it right this minute, but if I test support at about 550, 540, and that plays through, I could see putting a couple of bucks into a premium trade here on, so, you know, basically legging into a covered call. There's plenty of options. The option is every couple of bucks. The liquidity is questionable in the option series, so you'd really have to plan that out in advance, make sure that you've got some liquidity in the premium you're trying to sell. But if you could, again, think about it longer, that's what I would be focusing on, is the sideways movement, but again, not until we've tested and proven support at about 550.
Okay. I'm looking at it. It had a big run from $3 up over 10. Had a correction, kind of a textbook correction into a Fibonacci retracement zone. It's trying to work its way up. It's got a lot of potential resistance on the way up. I would want to see it break the Ichimoku cloud. I'd want to see it break to 200. If it could do that up here around 750, call it. If it can get to 750, it's probably going back over 10. But that's if. That's a big if. So I'm not interested until it can prove that. And it's a little thinner volume that I like. I don't know how deep the option market, how big the opportunities are there. From a technical point, just looking at the chart, I would go do a little research on the company, but it's kind of a classic early wave 5 trying to start a continuation. More evidence is needed for that to be proven, and it could easily fail, right? So. And it's got this big gap, right? My entry would be above that. It's got to go fill that gap and get above it before I get any kind of interested in it. So, and, I always love seeing a new symbol. I want to check it out. I get pretty interested in it. But not yet. Someday. Hey, we've gotten through 10 symbols off the list, which is pretty good. We've shared some of our ideas, a handful of them each. That's awesome. And look at that. Another hour has gone by, so we're going to go ahead and wind it down. What we'll do is go one more time around, and if you got any kind of closing thoughts, you got a link you want to share, something you got going on, this would be the time. But any kind of closing thoughts on the market, on trading, whatever, 1 or 2 minutes each, and then we will go ahead and make it a wrap. So back to you, Stephen.
Sure.
Last thoughts.
The last 12 months in 2017 were all green, and that was the first time it's ever happened in the history of the market. We have seen the lowest volatility ever in the history of the market, and we're running on what I would consider animal spirits. The odds of seeing a 10% pull from the year's open is actually incredibly high. That doesn't make me bearish. That just makes me a realist. I would like to work with individual traders who are looking to generate aggressive and sustainable wealth in the options market while keeping risk low. I think that the trend will continue. I'm saying this a lot because SPY, the spiders, are next on the list. I think that the trend will continue. Odds are we see sideways action, but just make sure that if vol manages to come back in this market, that you have some kind of plan. If it does actually manage to happen. So if you'd like to come work with me, become a better options trader, you can find me at investingwithoptions.com.
All right, investingwithoptions.com. Encourage everybody to check that out. Good to meet you, Stephen. It's good to be on here and hear your thoughts. Enjoyed it. And AJ, what are you closing thoughts, man?
Yeah, I want to reiterate something we said earlier, which is the importance of counting your reward after the trade is closed and actually architecting your trades based on the risk. And that's what I think is going to have to happen in 2018. Every trade you place, you better realize where your max risk is and then do your position sizing accordingly to make sure that your max allowable loss to your portfolio is not going to be exceeded. You want to be able to be in this game. I said it right when I opened up about being a marathon runner, not a sprint runner, and that's going to play through. I think as well that there's a high probability we're going to start seeing a little bit of a slowdown on this trend and go sideways. And so premium trading, letting theta decay for those options work for you and keep a sustainable kind of income going in every month is something that we've been focusing on. And if you want to check it out, now's the time, because February we're talking about a price increase. We've had a lot of demand in our program where we handhold people through these premium type trades, these ones that you set up and every month they kind of put money into your account. So if you want to check out the program, January is the month to do that. Just remember 6percentprotocol.com.
All right, the 6% protocol. I like it. All right, I think we're all kind of saying the same thing about the trend, right? It's like, jet fighter in a climb, even if it flames out, it climbs a little bit higher. So we'll see, right? We'll see. This trend is unbelievable in the broad market. It's not if, but when it corrects. And I think we just need to be focused on the realities. As long as it really is going up, stay with it, but be ready for it to turn down. And you articulated, AJ, the exact words I would use about risk control and architecting trades, right? You got to be prepared for the worst, and it should not be a setback, right? That you can keep on trading, right? If that trade loses, because that trade could lose, right? It definitely could. My website's followmetrades.com, and I have a stock advisory service. I have a trading room in the mornings, and a good way to get to know me is just to come check out my weekly newsletter, Beyond the Noise. You can sign up; it's free, and I offer my insights on the market, and you can see if that's a good fit for what you got going on for the people listening in. Well, hey, that's a good show. I enjoyed it. It went fast. We got some good insights on these trades here, and some good ideas, and really was glad to be here. And thank you, David, again for pulling it together. And I will go ahead and send it back to you.
All right. Thanks, guys. Great show. Just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet, to get updates on future shows. Also, next Monday is a market holiday again, so the Crowd Forecast News show is canceled, but we'll be back on January 22nd. But next week's Analyze Your Trade, the next episode of this show will be on. That'll be Tuesday, January 16th at 9 p.m. Eastern Time. It'll be episode number 19, so be sure to join us for that. And you can always go to TimingResearch.com/live to get access to the next upcoming episodes of the live broadcast of the shows. So just want to thank my guests again for this week. AJ Brown of TradingTrainer.com, Stephen Place of InvestingWithOptions.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Take care, everybody.